Hello and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So September, after a pretty strong first 2 months of the quarter, has been very weak for the stock market. And if you look at the quarter as a whole, momentum has been slowing for quite some time ahead of this volatility. Now, from an economic perspective, the labor shortage is impacting not only ports around the world where we're seeing lines of shipping freight containers, but also at home when it comes to school bus drivers and teachers, government job shortages as well. And finally, let's put Chairman Powell in focus this week. A lot going on in his life from the comments made and the recent annual retreat in Jackson Hole last month, along with meeting with Congress and being up for nomination here within a few months for his February reappointment and or expiration. So let's talk a little bit about the month of September. S&P 500 still, as of last night, yet to pull back to that 5% marker despite the recent volatility. That is something that has technically not occurred in the calendar year 2021. So we have had a pretty below average volatility for the US equities during the 2021 year, but not all as well. If you take a look at the orange line on this chart here, it looks at the percentage of stocks traded on the New York Stock Exchange that are below their 200-day moving average at just around 60%. So what that tells us is about 40% of stocks are in long-term downtrends, despite this nice steady uptrend that the S&P 500 has been in. You don't have to look far for where that is. During the quarter, mid-cap and small-cap stocks have been negative, not within the U.S. markets, but overseas emerging market equities actually down 8% for the third quarter thus far, much of that related to the China volatility for the property developer Evergrande and some of their default and contagion concerns. Now, on the U.S. front, we are dealing with labor shortages. This is something that Powell talked about. I'll mention a little bit more in a minute, but as I mentioned, shortages in various sectors. Here on the chart looks at the number of job openings, U.S. job openings for state and local government education jobs. That's not only school bus drivers, those are teachers. We're seeing delays in getting kids to and from school because of these shortages, and some closures and moving to virtual, sometimes related to this, as well as the rise in the Delta variant COVID cases. All this to say, this is going to have a big impact on the Fed's decision. So let's talk about Powell and the decisions that he and the board have coming up. If you look at some of the comments made at the recent meeting last week, it's somewhat the same, but perhaps a little more hawkish. And I think that's why you saw yields jump a little bit. Remember, the Fed has a two-part mandate. Inflation obviously above average right now, but the other part of it, maximizing employment, full employment, we're not there. And Powell has made relatively consistent comments about that not meeting the objective yet to raise rates. Market expectations are looking for tapering somewhere in November to December and a rate hike in 2023. But important to note, the Fed dot plot indicating that about 50% of the members within the Fed committee are expecting a rate hike in 2022 at some point. So it seems like they're right around that late 2022, early 2023 right now, depending on obviously the unemployment data coming out over the next several months. Odds are still that Powell will be renominated by Biden at 75% per predicted. So those are the odds, but obviously that can change from week to week. And that is somewhat very debatable, especially within the Democratic Party right now. And finally, before we wrap this up, I want to share a fun story out of a company called Shotgun Ceremonies, I believe out of Seattle, that moved from their location in a shopping center to a shipping freight container. So not talking about the backups at ports, but where we're hosting some weddings in the Seattle area. It's a shipping container trailer park, apparently at a relatively inexpensive cost of $350. According to the owner, he says this is the first shipping container wedding chapel in the US. I'm going to have to take his word for it because I just don't know how to confirm that. With that, I want to thank everyone for watching, and I'll see you next time. Thank you.